Hello, welcome back. Solo Brands is a company that is actually trending right now, and I wanted to take a little bit of a closer look. Now, this one is up 6% almost in the pre market. We'll see what happens when the market opens. But if we take a look at the stock news, you will notice that nothing is really happening here. There's no breaking news or anything of that sort. Yet the stock is up today and quite significantly. Now, I want to take a little bit of a closer look at this one. Again, it is trading quite some and it's down almost 80% from its 1 year high of 33 bucks. Right now sitting at 4.94 over here. Maybe 5.25 is going to be happening today or so. But in terms of the PE ratio, the company is actually high, has a high PE ratio, and you will notice that this is a very new IPO here. You can kind of see it if we take a look at the company profile here. You will see that Solo Brands is actually a company that operates a direct-to-consumer platform that offers outdoor lifestyle branded products in the United States, like camp stoves and things of that sort. And so this is an interesting one. It's a consumer company pretty much, a small company, and it's a worthwhile taking a look at it. And this is what we're gonna be doing now. Now, if we take a look at the max chart again, as much as we have, because again, a new IPO here, you will notice that it has been going down, and this is why it's a good idea not to buy in the IPO days, generally speaking. And you will see that the price to free cash flow ratio is actually negative right now, and a little bit better than what it used to be at least. Outstanding shares going slightly higher, but not incredibly much, so that's not a big concern. But yeah, the free cash flow is negative as we examined. Pretty good revenue growth here, starting from 50 million and creeping upwards quite some. Net income growth also increasing, but free cash flow, the company is still negative, although it did have a positive year. 5-year total equity growth, it's actually increasing nicely here. And net income margins seem to be getting suppressed, although they used to be negative, of course, but seem to be getting very suppressed here lately. Company doesn't have a lot of debt, which is a good thing to see, but it doesn't return much to shareholders right now. That doesn't mean it's necessarily a bad investment, though, because if it's too cheap, it may be worthwhile examining and potentially even adding to a portfolio. Now, let's take a little bit of a closer look here and take a look at the income statements. Of course, again, new company, not much data here, new IPO, and you will notice they have been increasing the revenues fairly nicely here, which is awesome to see. Now, if you scroll downwards, you will see that the net income was negative and then turned positive, which is another great thing to see, and it has an upwards trajectory. I totally dig that, and of course, a very, very small company, so it definitely is worthwhile examining in much more detail here. And you will see that the total equity has been growing as well. Another nice thing to see here. A little bit of additional paid in capital, of course, which consists of the highest majority of this total equity. It's because of shareholders pretty much buying stock. Now, the cash flow statement here, you will notice again we are starting with the net income becoming positive, yet our net cash provided by operating activities is still in the negative, mainly because there has been a change in working capital here, because in the previous year it was negative, so it was positive. So this is a one-off item, and likely if this kind of trend continues, the company will actually have positive free cash flow next year as well. Now, you will see the cash flow here. Again, it was 1 year where it was positive, but I'm suspecting that next year is going to be positive too. But you will see here that the company has been getting a little bit of debt. I'm not having much trouble with that. That's okay. And also investing in themselves, some acquisitions as well. So, the next thing, take a look at the stock evaluation tool. This is an interesting one to at least examine. Now, of course, we will not be going with this kind of growth. That would be tremendous and insane. But still, I'm expecting the company to grow nicely. So I'm going to go 20, 25, and 30, which I think the company can achieve. Now, the net income margin is the most complicated thing of all here. It's been low, and it seems to be getting lower, actually. So I'll have to go low here. I will go 1.5, and 2%. So very suppressed net income margins, and it may actually even be high based on what the company seems to be doing lately. Now, the free cash flow margin that I'm going to be using, again, we don't have many positive data in terms of free cash flow here. So the margin that we're going to use is a rather typical one that I like to use, 80, 90, and 100% conversion from net income. And if we hit calculate, we will notice that we are not there yet. The current price is expensive. So this is an interesting company, but we'd probably want to get it at a much lower price, maybe near $2 or so would make a ton of sense. It is trending right now, but it is still expensive for what it is, even having been down 80%. That's a problem with these kinds of IPOs. They can be super overpriced, and even at this kind of projection, they are still relatively expensive here. And you will notice that we use 2% for our net income margin. If we go with, let's just go with, let's say that it's going to be 2, 3, and 4%, the company will be doing better. In which case, it's our high estimate that becomes a buy, and our medium gets closer with a 3% net income margin. But it gives us a little bit more risk thinking this highly of a company, and also revenue growth is kinda nice here and kinda high too, although they could be doing better based on what they did last few years. Okay, that's what I wanted to talk about in about this one, and it's a short video of a company that is trending highly right now. You will see it being discussed quite a lot, and this is why I wanted to make sort of like a short video to kind of talk about this company and see whether it's an interesting opportunity. As it is right now, I think I want to be getting a better price on this one, and I'm wondering whether we even have any price targets here. Probably not. Yeah, this is a very small company, but it's a nice one to be looking at, and at least have in your shortlist for a potential buy as it goes down, if it continues going down, although we're seeing an upwards trajectory here. It's still a little bit more expensive than what I would like it to be, but very interesting. So thanks for watching again, and I'll see you soon, guys. Bye bye.